If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby. Hey, listeners, welcome to the show today. Very excited to bring Mark Lemmons on the show. He's a guy with a ton of experience who's going to be able to share his journey, give you some tips and some advice, and just tell you how he got to where he is today. He's the founding partner of FLW Capital. They're locally here in San Antonio, Texas. They've got a proven track record of repositioning large multifamily apartment buildings and driving investor returns, increasing NOI, all the things that you want to do in the multifamily space. During his 10 plus years in the real estate world, he's brokered over $100 million in real estate sales transactions. He's acquired a multimillion-dollar single family rental portfolio for himself. And he's partnered in over 10, or maybe it is 10 multifamily deals totaling more than 2,000 units. So again, a ton of knowledge and experience coming to the show. We're very excited to have him on. Mark also has a BBA in management from Texas A&M University and a THM from Dallas Theological Seminary. So a lot to talk about on that front as well, just based on our backgrounds. And Mark has been recognized in the San Antonio Business Journal as a Platinum Top 50 award winner, which means he's one of the top 50 agents in San Antonio. He's earned that award several times in the past few years, and he's got a bunch of designations that means he knows a lot more than the standard agent. So Mark is a family man. He's married to his wife, Sarah. They have 5 kids and 2 dogs. He keeps them busy all the time. So really great to have him on the show. Without further ado, let's welcome Mark Lemmons.
Thanks so much. Great to be here.
Awesome. So again, I went through and kind of discussed your bio, your background, and what you have done based on your bio. Tell me how, though, you actually got started in real estate. Like, what was it that drew you to real estate in the first place?
Well, I mean, frankly, I needed a job. So I'd actually gotten fired from a job. I was working in ministry, and the church thought, hey, we're going to kind of go a different direction. And so I'm like, oh. And as it turned out, it lined up perfectly, really, for me just to make that transition. I'd gotten my license just a few months prior, started to kind of put it out there, had a couple clients, and maybe it had one closing, and then it's like the record player kind of just scratches, and it's like, whoa, hold on, and so I dove in at that point in full-time real estate, and so it was just like, all right, let's go for this. And in all honesty, I drove hard for about 6 months, but my family situation being what it was at that time, I was like, I kind of need a stable income. So after about 6 months, I ended up taking a full-time job and did real estate on the side in order to build my real estate business up. And so I think a lot of people have this misconception in real estate that you can just make a ton of money. And that does happen for some, but the reality is it doesn't happen for most. Those who work hardest, those who grind the most tend to have the best results. But there's plenty of people that think it's easy money and they get into it and it doesn't happen. And so for me, I thought, hey, I'm going to do okay at this, and I did okay, but it wasn't reliable and consistent enough for me to do it full time out of the gate. And so after 2 years of a full-time income plus real estate, then I was able to leave that full-time income and go back into real estate full-time. After my short 6 months of full-time, then I jumped back into it. And so fast forward now 10 years later, and real estate's all I do. And it's been a great journey, been incredibly blessed, and thankful that really I got fired. Not many people say that. I'm thankful I got fired, but yeah. I'm one that will.
So a lot to unpack there, because I grew up, my dad's a Baptist pastor. So I grew up in the church, going to church all the time. Right.
Okay.
And so when I saw that you had, a degree from a seminary or theology school, I wanted to, press on that and kind of figure out what you did with that degree once you were out of that. So what were you doing? What was your role?
Yeah. Well, for the majority, I was in ministry for about a dozen years. And the majority of that time, I was a youth pastor. I have a 4-year master's of theology, which all that really tells you is I like to learn. I do enjoy just diving in and learning stuff. But I only really applied that as a youth pastor. And then I did one short year as an adult ministries pastor, but largely just hung out with junior high and high school students and taught them the word,
Yeah. That's great. Okay. So you were one of the guys that I saw when I was growing up, basically type deal. Awesome.
Yeah. Overeducated and underpaid, but I was one of those guys.
Yeah. Okay. And it's also interesting that you got into real estate, or did you see the writing on the wall? And so you said, I need a backup plan, or I just, what made you even want to go get your license? Like, how did that even come?
I mean, at that time, my family was young, but growing, and the, pastors' salaries, especially when you're not the head guy, is, they're fairly limited. And so I was, salary wise was just kind of bumping up against this and just like eating into savings every month and every year. And it was like, oh man, this is not sustainable. And so it was like, okay, what could I do while a pastor part-time and make some extra money for my family? And so real estate came to mind. And, as it turns out, I learned after I was starting to get my license that my mom decades prior had gone through all the classes and didn't get her license.
Oh, really?
But from that, she would, through the years, teach a lot of principles about real estate and, just kind of teach us stuff as we're growing up that really has impacted me to this day.
All right. We'll talk about that in a minute too. I'm going to give you a chance to shout out, maybe give her even more love when you.
Okay.
Yeah. So you got into, I'm going to go back. You got into real estate. You had to go back. What did you do when you were working the full-time job and then doing real estate on the part-time side? Did you get back in ministry, or were you doing something else?
No, after I got out of ministry, I had a handful of people that said, hey, if you want a job, let me know. Hey, let me know if I've got a spot. I'd love to have you fill it. And I told all of them no. And then a few months later, I circled back and all those jobs were filled except for one. And so I took that one. And it was sales and marketing at a nursing home. So you could argue it's somewhat ministry related because you're loving on people, helping them in a time of need. But I would also argue that it's somewhat real estate because you're selling them real estate in this little room with a bed while they get some nursing care. Yeah. But truth be told, I didn't love it. I endured, I grinded, but it's hard. It's just real hard. And
Is that how you met Bruce? I mean, this we'll probably edit out, but is that how you met Bruce?
No, I met Bruce playing basketball in New Braunfels.
Oh, okay. All right. I didn't know if that was related because he had some of those facilities, right? So I didn't know if he was the buddy who had the gig for you.
No, that totally unrelated. I worked for like $1 billion company that had hundreds of facilities across the country. Okay,
got it. Okay. So you were working there and you had you finished all your classes, I assume, right? Like you were done with your classes and you'd sold a deal or two. You were doing residential real estate, or what were you focused on with your license?
Purely residential.
Okay.
Just helping people that I already knew buy and sell houses, buying some investment properties. I had some buddies that were starting to get into that. And so just built my business, hustling for my friends and family, really.
There you go.
My little sphere of influence, right?
Yeah. I mean, that's how a lot of us get started, obviously, when you're doing the brokerage side of it.
Right.
And commission based. So when did you get back into it? It's been 2 years. When did you get back into, or when did you actually start and feel like you wanted to buy a property or invest? Because at some point you made that transition, and I'm just curious how that transition actually happened for you.
Well, prior to having a license, I wholesaled one deal in my life.
Okay.
It was pretty good. I flipped a house prior to having a license, and I halfway flipped another house. where I basically ended up selling it to a wholesaler who then sold it to somebody else.
Yeah.
So I'd done a handful of deals. I already had a rental property in my portfolio at that point. We kept a house as we moved on to a different house, and now we've got to birth a rental property.
Yeah, the house hacking, present day term, probably not.
Yes, exactly.
Not the term back when you started doing that.
No, back in the day. This is, this is 05, 06 time frame. It was pretty crazy real estate market at that point, and I was studying real estate. I didn't have a license to do it.
Yeah, but still though, I think I didn't know that you had already bought some prior to or done any kind of real estate prior to you getting your license. So you always had it in your, I guess, DNA that you wanted to be on the investor side, not just the brokerage side. It's not like you got into it just to be a broker or be into the
right.
Yeah. Okay.
But at that point, I only had my one little, rent house, and that was it.
Yeah.
And, but then getting my license, that kind of propelled me to start growing my portfolio and adding to it. Yeah.
So, okay. So you started, I guess, after you had your license, and you had done a few of these wholesales and you went full time. Like how did you decide to go full time? And then how long were you doing full time before you got into, building? Because, I've read in your bio, you've got a multi-million-dollar single family residential portfolio. Do you still have that? So tell me how that progress happened.
Yeah, it was kind of like, as I'm doing the brokerage thing and serving other people, you run across a deal every once in a while. And this is, after we had the 08, 09 financial crisis, and then the market really kind of still trended down for the next couple of years after that. And 2010, I think, was probably the low point in the market, at least in my neck of the woods. And, I did buy my primary residence at that point, which was a great time to buy. But then, of course, kept my house, the house hacking, like you mentioned. And then it wasn't probably for, then I got my license in the beginning of 2013. And I think I bought my first investment property after having my license at the beginning of 2014. So it was about a year after getting my license. I'm like, dude, this is a deal. I need to jump on this thing.
Yeah.
And that one was literally one of my best ones, because it was one of those where I bought it as a foreclosure with hard money, used the hard money to renovate it, refinanced out of it, had zero capital invested in it. Yeah. And so it's one of those, I'm sure you've done a number of those and seen and helped other people do a number of those through the years, just knowing a little bit about your background. But it's one of those that's like, it's a home run, and it just continues to cash flow. And
it's still
paying down that note really fast.
Yeah. And it's, that Burr model, again,
exactly.
It's a great way to get into the investment side of it and not have any money on the table. And if you did put money on the table, to pull it out so that you can redeploy it and get, a new asset it's paying itself off. So yeah, that's fantastic. So you, again, the trajectory that you had, that was 2013 around?
That was 2013. And then from that point on, I kind of kept on adding it, about one a year.
Just read Millionaire Next Door or something?
I never read it, but that's what I did. It felt natural. I'd save up. I'd work hard, save up, and have a down payment, and go find a deal.
Yeah, deploy the capital. Yeah, for sure. Yeah, that's what's so important, I guess, about taking that active income that you were earning through the commissions and then redeploying it into some sort of passive income strategy, so that you can actually have your dollars working for you rather than, trading your time for money. And that's one of the key points that we're trying to get across is, take the money that you're earning and go deploy it into something that's going to give you some passive income so that you can be work optional at some point, right? That's the idea.
Yeah.
So great to hear. That's how you started. But at some point you had to seriously ramp up your acquisitions or your knowledge on type of deals. So like, when did you either really turn it on? I guess over 10 years, if you buy one a year, you could have $1 million portfolio fairly easily.
Right.
But did you ramp that up, and did you ever go single family is like the thing and I'm going to buy as many as I can? Or was it at some point you just said, I'm never going to be able to scale this and I need to jump into larger assets? Like, how did that?
At some point I got tired of tenants and toilets, and I said, I need something else, because I don't want any more. I manage all of mine myself still to this day, as far as my single family. Today, I don't manage my multifamily. That's third-party professional management. But I got to the point where I'm like, I don't want any more single family. And so what can I do? And so that's when I began my, I guess, process of discovery and learning about multifamily, how I could invest in it, and began pursuing investments in multifamily. And so, probably a number of years ago, probably 4 years ago, I started investing passively in other guys' multifamily deals, and just would invest a chunk of change in the deal as it came along, and I'd invest in some guys multiple times, and other guys it'd be kind of a one and done, but just kind of grew that way, and then got to the point where I was like, okay, I've been passively investing. I've done the single family, I've done the brokerage. I think I can do the syndication piece as well. I've seen it enough.
How long ago was that?
About 2.5 years ago.
2.5 years. So you had invested passively. You just and I'm going to take it back even further than that. So why multifamily? What drew you to multifamily over maybe storage facilities or some other kind of asset class that's an income producing property?
Well, I mean, scale and leverage, for one, but then also it's like if economic times get really tough, people can close down a storage facility, their rental space there, sell off all their stuff and move on. But they always need a place to live. It is recession resistant. It is it's a need. It's not a want. And so it endures any type of economic environment as long as it's, structured right on the front end. It can endure whatever the economy throws at it.
Yeah.
And for me, that resiliency and that just the durability of that investment was crucial for me to say, yeah, I'm going to put some serious money behind this.
Yeah. Yeah. Obviously you want to protect your investment, and
absolutely,
that's one of the questions I have for you is, the not just the asset class. We go often and we in real estate can talk about, what's your buy box? What do you look at? What do you focus? And all the types of metrics that you look for in either a location or the market you're buying in, or the type of assets that you're going to buy.
Right.
But the other side of it is like, what kind of investor, now that you're in the syndication game, you're raising capital and you're going and deploying other people's money into, assets. The same question can be asked, like, what kind of investors are you looking for? And I'll let you answer that. But the reason that's so important is because you have identified that something very important to you is, capital preservation, right? And that's investing in a resilient asset class seems to be very important to you. So again, I would imagine your response or your typical investor that would invest in your deals wants something very similar to you, but I'll let you answer that. I don't want to put words in your mouth. Like, what is the typical investor that you are looking for to come in and join you on some of your deals?
Yeah. I mean, we're always looking for people that maybe they're kind of gliding into retirement and they're like, hey, I got money to invest. I want to invest. I want to diversify out of the stock market or out of whatever else they're in. And I like the durability and the resilience of multifamily investments, but I want it passively. And so those type of investors are what we're looking for. And that, we look for them also, though, younger, that are like, hey, I want to grow. But I want to do it safely because, hey, I'm maybe in my 40s and I've got some excess capital because I've worked hard and I've saved, or, I had some investments that came through, or I sold this off, or whatever the case may be. And so I'm going to be doing these things over here with my money, but I want you to work with my money over here too. And so it's, but the type of investor we're looking at, they're often looking for that depreciation as well. Like, hey, how do I bring my tax liability down?
Yeah.
And multifamily is a great asset for doing that because we can accelerate that depreciation with a cost seg study and really bring that tax basis down so that we're writing off the majority of every dollar invested. And that's so powerful, especially in these times where taxes just continue to go up and up and up. And
that's one of the things for sure that is key to our listeners to know is that as a real estate professional, you have an additional benefit when it comes to that like cost seg. And so understanding that and the actual write-offs that you get from investing into an asset like multifamily, it's huge.
Yeah. And we have a lot of investors in our projects that are not in real estate. And so they get some tax benefit from it, but not as much as those who are in real estate. And so your point is well stated there that just, I mean, when we have some agents and brokers that are invested in our deals, but those people, full-time real estate professionals, benefit the most from this type of investment.
Yeah.
Bar none.
Yeah. It's huge. And it's changing your commissions into passive income without having to go and be the one who is clunching the toilet, having a good time.
Right.
Yeah. I mean, it's always fun. I've tried to turn all of that over to my wife. I go, you want residential properties, you can have them. So
great. Thank you.
Yeah, exactly. Okay. I'm going to shift gears a little bit and let's talk a little bit about, if you can remember, when you first started investing in real estate, what were some of the biggest fears that you had? Do you recall? I know it's been a long time. You've done a lot of deals since you first started.
Yeah. I would say the biggest fear is just, I think we all have it, is that fear of failure. Like, hey, I'm going to get into this thing and then, I'm going to have some massive problem that I cannot afford to fix and I won't know a way out. And that didn't stop me from going, but I certainly had that fear in the back of my mind the entire time. And, bankruptcy is a word that, people throw out. And I'm like, man, and especially starting out, because I was making nothing as a youth pastor. And so, every commission mattered and every investment really mattered. And so I was very hands-on to make sure that I kind of micromanaged the process to make sure that this asset started producing. And I vetted my tenants very carefully. And not that I don't do that today, because I still care a ton and that matters a ton, but it's less of a fear. The fear aspect of it has died down because it's like, okay, no, I have a lot more tools in my tool belt now than I did when I first started out, that I can get creative and there's a lot of workarounds that I didn't know about early on.
Yeah. I think the point there is that it may have been an unfounded fear, right? You start out and you're just like, oh, everything can go wrong. I'm going to lose all my money. Oh no, the tenant's going to ruin the house. And over time, you realize that that's not necessarily the case. People really want to take care of their houses. In my time of doing this, the prices haven't dropped like they did back in 2008. Not saying it can't happen, but it's just one of those things. The people are still paying rents. So a lot of those fears kind of go away over time. And so, it's not that you don't check your tenants, but you have the right processes in place to do so.
Exactly. Yeah.
Okay. So, kind of along that same line, if you were starting out or if you have some agents, even, I know you're a broker, right? You are.
Yeah.
Okay. So you have somebody on your team and maybe they've never invested either passively or they've never bought a single family, they've never done anything to invest, but they want to. Like, what would your advice be to them to just get started, whether it's, in syndication or in a single family?
Okay. I'll tell you, I'll give two pieces of advice if I can.
Yeah.
And one of the things that I often tell, first-time home buyers or, younger families that are looking to buy their first house, I tell them you grow into your payment. It feels like, oh my goodness, I cannot afford this. And, the lender is likely not going to lend, more than what you really can afford, but you have to be comfortable with that payment. But at the same time, as you grow in your career, your income typically rises. And so you grow into your payment. It begins to feel normal. At first when I was buying houses, it's like, oh my goodness, $1,000 payment sounds massive. And because I had payments that were under that. And then I first started hitting $1,000 payments. I was like, oh my goodness, wow. It was like a new mental block that arose, right?
Yeah, that's right.
But I'm like, you know what? I'm going to grow into this payment. It feels big, but I'm going to grow into this payment and I'm going to do this investment. And so I did. And so I would tell that to a new investor, an agent that's out there like, man, I got to start making my money work for me. Well, take that leap, buy that first investment property, get out there and put yourself out there a little bit, because one, it's a durable investment. It's not going anywhere. They're not making any more real estate. There's a housing demand and housing shortage that we've rarely seen before. And so there's going to be demand, and there's going to be somebody that needs to and wants to live in your place. And so, obviously crunch your numbers, make sure it works, but just take that leap. Get out there and put yourself out there and grow into that payment.
Okay.
And on the syndication side, my thoughts and advice are take some baby steps to work towards where you want to be. You're not going to get there overnight, but get with other syndicators that are already doing this and have been in the game for a while and say, hey, how can I add some value to you? How can I help you get from where you are to where you want to be? And how could I be a part of your puzzle to help you get your next deal or your next 5 deals? And just offer yourself there to say, hey, let me help out. Let me grow. Let me learn.
Yeah. I think
put yourself under somebody to be teachable and to learn, and you will grow more than you probably ever imagined.
Yeah, I agree with that wholeheartedly. I mean, it's the reason we all join either a mastermind or join, real estate investor meetup groups, just to network and learn from other people. So it shortens your learning curve and gets you more comfortable with making that leap, as you would call it, So, all right, let's shift again, just kind of talk about the economics. We've got a couple more minutes here. What are you seeing right now in the market? It can be on the single family side. I know you're big in that still, but multifamily as well. What are you seeing right now in the market?
Yeah, I mean, the obvious answer is a rise in interest rates and a crunching of the numbers, really. I'm also seeing just more opportunity that I see it coming. I don't feel like it's here yet, but I see more opportunity coming in the very near future. Because
go ahead. Sorry.
I think in both single family and multifamily, there's going to be, some folks that maybe got a little overstretched and can't afford what they thought they can afford, or maybe they had a variable rate loan. And especially on the multifamily side, the bridge loans were so popular over the last 4 or 5 years that there's going to be some folks that cannot adjust, and the interest rates rise. They didn't buy a cap and they're in trouble.
Yeah.
So they're going to have to get out, and they're going to have to get out at a loss or an extreme discount to where they thought they would.
Yeah.
And so there will be opportunities that arise.
Yeah, I agree with that side of it. On the multifamily side, there are more deals that should be coming available, and operators like you who are seasoned and experienced and able to identify those, and you have the broker connections and that sort of thing, I think they're going to be coming to you. So that's great. Yeah. And then kind of on that same vein, what asset class are you really excited about right now? I know you are working on something else. I don't know if you want to talk about that on here or not, but are you excited about the multifamily space? Or are you going big?
Absolutely. Yeah. The fundamentals of multifamily haven't gotten any worse. They have only strengthened because of, as I mentioned, just the housing shortage, the rise in pricing just to build these suckers is just continuing to go up with inflation. And so there's just increased demand for multifamily product. And so as a result, the rents are going to continue to rise. It's a problem to solve. How do we finance this thing? How do we get into it? Yeah. But if you can solve that piece, then it should make sense from that point forward. One of the things I'm actively looking for is loan assumptions. For those that maybe have a longer time horizon, they're locked in on a rate for 5 years, 7 years, 10 years, whatever that is. And, pursuing those type of purchases where it might be a larger cost of entry to assume that loan, it's going to be, you're paying more like 50 to 60% of the total purchase price, but you're going to likely, on the multifamily side, they're not going to have to pay any yield maintenance to get out of it because you're going to assume the loan.
Yeah.
But then in addition to that, you can just continue to raise the rents, improve the product, force that appreciation, and move on down the road as you operate it well.
Yeah. And bringing more equity to the table isn't necessarily a bad thing, right?
It's safer.
Yeah, exactly.
Right.
Safer, your investors are more secure, the property, and then you come in and you do your normal operations and improvements and that sort of thing. And yeah, I like that approach as well. That's a solid way to go about it.
I think it's going to require some creativity from everybody in this space. Like, okay, how do we make this work? Not, okay, it just doesn't work. I think that's the wrong perspective and wrong mindset. But like, okay, how can we make this work?
Yeah. Have you seen many owners or properties that are owned free and clear?
A few here and there. Yeah.
Yeah.
But not that many.
Yeah. I'm just curious, like if they would ever owner finance or 150 unit plus, and not many of them are debt free that I know of. I've heard of some that are, but
I mean, last year I ran across two that were owned free and clear, and we tried to owner finance on both of them, and they're like, nope, I just want to walk away.
Yeah. Yeah. I mean, it's hard to say no when the market is going gangbusters like it has been.
Yep.
Take the money and run. So, all right, let's see. I've got a couple of rapid fire questions for you, kind of unrelated to all of this, and then we'll wrap it up. So,
cool.
On a more personal note, what's your favorite pastime that's not related to business?
I would say favorite pastime is playing basketball.
All right.
I'm
got a baller.
Older. I'm slower. I'm not near as good as I think I am, but I love getting out there and just staying competitive and trying to hang with these guys in their 20s and 30s is not easy, but I get out there on a weekly basis, if not more, and love staying active.
Yeah. I've got to tell you, I've been playing a lot of pickleball and And so it was funny. You had a few friends that came in and we were playing pickleball, and there was a basketball hoop there and they brought their basketball stuff as well. We played, I don't know, probably 20 games or something of pickleball. One game of basketball, and we were just all winded. Just like it's a very good workout. So yeah, I can see that.
Yeah, I am enjoying pickleball a lot myself these days. One of my neighbors has it. I've got a pickleball tournament actually later this month.
All right.
So it is a fun sport I didn't even know about like 4 years ago, and I'm like, where'd this thing come from?
Now everybody pickles. If you ever want to pickle.
Right. Exactly. Yeah, let's do it.
Yeah, we have a good group that gets together. Okay, so then what's the best thing or memory that's happened to you or your family in the last 60 days?
60 days.
Could be 30, could be whatever. I just don't want it to be like, I had my daughter 10 years ago. So happy,
Right. Yeah. All right. Thanks. Captain Obvious right there. 60 days. I would say my kids going back to school. It was like okay, yay, you're gone, leave me. I'm just kidding. No, I'm gonna stretch it back and give you an answer you didn't ask. I got married about 6 months ago. I previously married and got remarried here about 6 months ago. And so my family, it was me and my 3 kiddos. And so we went to a family of 7 total. My wife and her 2 kiddos joined us. And so it went from, me having all teenagers to now having a couple younger ones. And so it's just, when we're all together, it is chaos. It's fun, but it's chaos. And so we did get some time. It was about 60 days ago, just a little staycation because summer schedules were crazy with everything going on with all of us. And we did find one little weekend to, find a local resort around here and just kind of got away for the weekend. And it was a ton of fun.
Yeah, those are great. So, that's great. Well, congrats.
And we played a little pickleball while we were at it.
Yeah. Congrats on the nuptials. That's great.
Thank you.
And the family. I read that you have 5 children, and that has to keep you busy. Has to keep you busy.
Yeah, there's something every day, seemingly every hour. But
yeah, I imagine.
How many kiddos do you have?
I have 2. I have a 5 and a 2-year-old, and it is amazing. Like every day, I have a little journal that I keep for them. I'm not as diligent as I should be, but I try to write stories to them all the time. And so it's funny just flipping back through that and kind of seeing their journey and like things that they do. Yeah. It's great. It's made me a better human. That's for sure.
Love it.
Okay. So here's your chance to shout out to a couple of people. So name 1 or 2 people who've been most influential to you, maybe the way you think or, to your success. One way. You can take that how you want.
Yeah. although I've never met him, Porter Stansberry is one that I consider one of my financial mentors. He has like Stansberry Investment Advisory, and I had, subscribed to a lot of his philosophy. He's a big proponent of like saving 50% of what you earn so that you can then invest.
Yeah.
But his investment advice through the years has been pretty powerful for me as well. And so just big shout out to Stansberry, or Porter rather. And second, I would say Devin Elder, a local friend of mine, but also a fellow syndicator. He's just, given me a lot and helped me kind of grow to be who I am today in the investment world. And so grateful for that time and investment as well.
Great. Well, I'm going to get to know Devin because I'm joining you in some.
Okay.
Yes.
Awesome.
So that's great. And I definitely wrote down Porter's name. I'm going to look him up as soon as we get off and find that out, what he proposes I do. But yeah, I was at a conference recently and Shaquille O'Neal was talking.
Oh yeah.
That was one of his things. He said, I took my money and I invested. I took my money and invested. And one of my biggest regrets is that I didn't take more of it and live on less. I could have lived on 10% and invested everything. So yeah, great advice. Okay. So let's see.
I read an article about Shaq in Success magazine, probably 4 or 5 months back, but it was just, it sounds like he's a super smart dude with his money. So I haven't heard him talk, but I was impressed by what I read. He
is. I think my takeaway from hearing him speak was that he's most intelligent with people, right? He would rather have the right people around him to invest his money. He's like, I couldn't tell you. I think the person interviewing asked him how many units he owned. He goes, I have no idea, but I partner with a great syndicator and a great operator, and they have my money and they're buying as many as they can, something like that. Absolutely. So he credits the people around him. It's very smart. So I think that's what he is. So, all right, Mark, we got to wrap it up. We hit our time, but I really appreciate you coming on the show. Great chatting with you. Thanks for sharing your advice, your knowledge, your journey with us. Can you, share your contact information or some way of getting in touch with you? So that the listeners can reach out if they have any questions for you or if they want to jump in on maybe a deal that you're working on.
Yeah, would love for you guys to connect with me on our website, flwcapital.com. Additionally, you can connect with me on Instagram or Facebook. Instagram, Mark Lemmons Group, which is my real estate side of things, or just on my Facebook at Mark Lemmons.
Awesome.
And
perfect. We'll put that in the show notes as well.
Yeah. Thanks so much for having me, and look forward to connecting with you again soon, but also some of your listeners.
Awesome. All right, Mark. Thanks so much.
Yeah, man.
Have a good.
Take care.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.